Welcome to the Market Recap, your weekly digest of the biggest market stories from the past week. Join host Anna Serin and financial expert Bruce Campbell as they go beyond the headlines to deliver cutting-edge insights into news that move the market. Proudly presented by the Canadian Securities Exchange.
Hi, my name's Anna Serin. I'm Director of Listings Development with the Canadian Securities Exchange. You're joining us here yet at another market recap here on Friday, June 9th, 2023. I am rejoined by my wonderful co-host, Bruce Campbell with StoneCastle Investment. Thank you for joining me, Bruce.
Yeah, hi, Anna.
How's it going? It's been a while.
Yeah, it's been a bit, that's for sure. Yeah, I'm back at her now, though.
That's wonderful. I always feel surprised when I look at the date right before we start. I can't believe we're approaching the middle of June. And there's lots to talk about today. So let's jump right into it. We're going to talk about an increase in rates. This week, it wasn't across the border. It was in our own country. In Canada, we saw a rate hike. So you're going to tell us about that. We're going to talk about the market broadening out for the Russel 2000 and performance there. We're going to talk about the NAAIM sentiment. I'll tell you what that is. And then Bruce will tell us what happened. And then, of course, we're going to get into some CSE issuer news. So, Bruce, let's start off with the Bank of Canada. Now, I believe it was January, the Bank of Canada had said that they would put a pause on rate increases. And I think from my understanding that inflation is just too sticky, and they had to change their tone there. So we saw rates go up this week. What happened?
Yeah, that's exactly it. Going back to January, they announced that they were happy with where things were and that they would pause rates, which they did. We saw a rate pause for several meetings here, and then this week it was a bit of a surprise. It surprised the markets both here in Canada and really around the world, because they hadn't really telegraphed at all that they were going to do this. They just came into their meeting and bang, they jumped up interest rates. They looked at the data and said that they were concerned about what they were seeing, from an inflation standpoint, and the fact that it was still sticky, so they needed to raise interest rates up again. We also saw the bank in Australia do the same thing, and so there's lots of speculation that next week we could possibly see the Fed go up with their interest rates. Right now, that's not the projections, but after we saw a surprise from Canada and from Australia, there's more people talking about the possibility of the U.S. going up.
It just seems like, from the few things that I read, it just seemed like it is not getting to levels. They're hoping to get inflation down, below that 2%, that 2% rate. And sticky inflation is definitely the word of 2023. It feels like, so they just have to go at it.
One of the things that, when we sort of dug into this a little bit, the cycles tend to last. They're kind of, sort of 36 to 20 or to 48 month cycles. So, sort of think about the way up, it was probably 18 months on the way up, right? We peaked out last June, using the US numbers, we were around 9%. And now the last print was a month ago, and it was 4.9, and the expectation is around 4.2. So it's been cut in half, but we still need to cut it in half again to get down into that kind of 2% range that most of the central bankers feel comfortable with. So I wouldn't be surprised if it takes us another 6, 9, 12 months to get there. And everyone's probably a little bit on the side of not having much patience for this to get there. And so, central bankers are in that same camp, and they've, raised interest rates again to try to get us there. It'll be really interesting to see once we actually fall there, are we there because we're in, sort of a deeper recession? And that's the question that, I guess the $1 million question that everyone's asking in the markets.
Yeah, I mean, it's not a great time to be leveraged or fully leveraged. So anyway, we'll wait and see what happens, but hopefully they're successful, because the whole point of this is to bring inflation down. Okay, we're going to talk about the market broadening out on the Russel 2000 performance. The Russel 2000 is an index of 2,000 stocks. They're in the small cap space. Is that right, Bruce?
Yeah, exactly. It's in the US, and it's sort of the smaller cap, the sort of best known smaller cap index in the US.
And it kind of is a bellwether of U.S. economy, because it's focused on kind of the small cap, what's happening in general in the economy in the U.S.
Yeah, it certainly gives you a different flavor for what's happening then versus something like the Dow 30 or the S&P 500. And, there's been so much talk this year about the fact that, there's been only a few select number of really big mega cap technology stocks that have driven the return for the S&P and also, in a big part for the NASDAQ. And the Russell has kind of been left behind. And, from where it looked like it was going to actually break out in March, just before we had the challenges with the banks in the US, to now, it was really left for dead. And then this last week started last Thursday, like a week ago Thursday. We saw strong performance Thursday, Friday, and then Tuesday, Wednesday of this week. So it's certainly a good sign. That's what, kind of anyone on the bearish side or anyone who was in the neutral camp was really, pointing their finger to and kind of poking holes in the fact that this could be, a good market or a bull market, was the fact that, the leadership was so narrow that it was only really these big cap stocks. And now we're seeing, we're seeing the leadership sort of catch up from these Russell 2000 stocks. The thing that, a lot of market observers are watching to try to figure out is, was that just short covering? Were we just seeing short covering from a lot of these stocks that have been down so much? And that's always how a new bull market starts, is that short covering. Now we need the follow through. So we'll have to wait and see, over the next couple of weeks, whether or not we get that follow through, and whether or not this is, a market that's broadening out and getting more bullish, or if it was just another one of those bear market rallies.
Just to remind people, because I think it's just the past few years that I think, even a retail, maybe less sophisticated investor even knows about shorting. But covering a short is essentially, the idea is that you buy a stock and hope that it goes down, not the typical going up, which is holding a stock long. So when you short a stock hoping it goes down, if it doesn't go down and it goes up, which it can go up into endless numbers, at some point you have to cover the short, right? You have to, you can't just let it keep going up and owe on that. Is that right?
Yeah, from a risk management standpoint, it just becomes too painful because your upside is completely unlimited. If you were short Monster Energy over the last 10 years, you would be broke effectively. You just continue to have more and more margin calls. So you just can't let that happen. Whereas, being long a stock, it can go to zero and you know exactly how much money you've lost. With a short, it just continues to go up. That amount would continue to appreciate. So if you are a short seller and you're offside, meaning the stock's been going up, then at some point in time, from a risk management standpoint, you have to cover, and you just, you bite the bullet, and it means you have to buy. And if there's a number of people buying all the same day, that, pushes the stock price up, which exacerbates the problem for other people who are short, which causes them to buy. And, that can cause quite a bit of momentum on the upside.
Exactly. So if there's a stock, like when we were talking about the meme stocks, if it doesn't do, if there's a bunch of people shorting it, if it doesn't do what everyone thinks it's going to do, it has a whole other flip side of issues. So it's a very sophisticated move. Definitely be cautious if you're doing it. Make sure you have professional guidance. Okay, let's talk about the NAAIM sentiment. So the NAAIM is National Association of Active Investment Managers. So what did you see?
Yeah, so this is something we talk about a lot, sentiment. And in this case, we just pulled the NAAIM survey. We could have also looked at the American Association of Individual Investors, because the data was very similar, but it improved to the bullish side quite a bit this week. So if you look at the NAAIM, what they look at is how invested those portfolio managers are, and they're portfolio managers around the US. And what they can be is they can be 100%, net long, or 100% net short, and kind of anywhere in between, or sorry, 200% net long and 200% net short, and anywhere in between. And the range typically falls, if the market has been under a lot of pressure, it typically falls in kind of that, sort of 10 to 25 range. If the market's been very strong for a while, then it'll be over 100 as far as how invested they are. And what we saw was saw a fairly significant jump up this week, meaning that those investors got more invested into their portfolios. They took cash, put it into the market, which isn't too surprising given, kind of the follow through that we saw last week when this survey comes out each Thursday. And we saw, last Thursday would have been quite strong. So that wouldn't have been reflected in this data. Friday was strong, and then we also had a couple of days earlier this week that were fairly strong from a broad market perspective. And then at the same time, we also saw the individual investors. They've gone now to being in a bullish position. So there's net bulls. We haven't seen that in quite some time now. And that again is showing you, that the sort of stance has changed. There's so much money on the sidelines right now that, that keeps being talked about, that, if this starts to come in, then it could actually be, sustainable for some time for the markets. But of course, again, $1 million question is where we're at. Like, are we heading into a recession? How deep will it be if we are? And when does it start?
Absolutely. And typically when that money is on the sidelines, when you start to see that smart money dive in, that's usually a big catalyst for the markets, right? So watch and wait, so to speak.
It can be, for sure. Yeah.
Yeah. Okay, let's talk about some CSE issue news, my favorite part of the show. Today, we're going to talk about all things lithium. As we get ready for our show every week, we do a big review of all of the press releases that come out, and I definitely saw a trend happening. And one thing that's really exciting about this time of year, I personally find really exciting about this time of year, is all of our amazing exploration companies that are exploring for all precious metals and battery metals and critical minerals. Is that typically this is the time to be completing their drill program. So press releases get pretty interesting. And if you're a geek and enjoy some of the data that comes out of it, it's a pretty neat time. So they go and they do their financing. They get their drill programs ready. And this is typically the time that they're out there doing it. So we saw a bunch happening in all parts of the mining sector, but lots of lithium stuff to talk about. So wanted to talk about LIFT. They announced that they have initiated their 45,000 meter drill program at their Yellowknife lithium project. So congratulations to them. They are on site, ready to go. Up in Yellowknife, Bruce, and I don't know the exact number here because I actually spent some time up there, but their window is short up there to be able to be up there and active because the winters, they come fast and hard. So good for them. Foremost Lithium, they actually they received some assay results from their program, and they're looking for both gold and lithium, and they found the potential for spodumene, which also demonstrated a possibility for gold mineralization. So congratulations to them. It'll be great to see what else they discover. Victory launched an exploration program. Their team is on site conducting summer exploration program at its Georgia Lake Lithium in Thunder Bay in Ontario. So congratulations to all of them to get out there. It's always a huge endeavor to mobilize your team, to raise the money, to build the work program, and excited to see the results that will come from there. But I also kind of wanted to ask you, Bruce, lithium is kind of it's the darling of the mining industry right now. What are your thoughts on lithium? What are you seeing?
I mean, with the fact that it seems like most people you talk to want to eventually move towards an electric vehicle. There's legislation that's coming out now to move everyone towards electric vehicles. Whether or not those timelines are hit or not is another thing. But there's going to be a huge demand from the battery perspective for all this electric technology that we're looking at. So it could be a number of years of the focus while the supply of lithium gets up to where the demand will be. And so there's going to be lots of exploration. There'll be lots of interesting exploration stories. There'll be lots of development stories as they go from the exploration to actually building and producing facilities and mines that can produce the lithium. So it's going to be something that's probably a big focus for markets here for probably, it could be really the better part of the next decade, I would think.
It's definitely a word you hear a lot of in the markets, that's for sure. Okay, Bruce, what should we think about going into next week?
Well, the big thing is the market continues to wait on the Fed. So the Fed meeting's next week, and we'll find out whether or not they hold rates or they raise rates. Right now, the expectation is that they're still going to hold rates where they are. I think 75% of the market thinks that, or around 75% thinks that that's what they're going to do this week. But it'll probably be a little bit driven based on what they see in the data. And if the data still shows that, things are too frothy from an inflation standpoint, they might hike again. I know that there's, always lots of Fed governors and Fed officials who are speaking, and, they tend to keep us on our toes by, sort of talking two different stories all at the same time.
Awesome. Well, listen, you have a wonderful weekend. It's always a pleasure to see you again when we've had a little break from each other. Also, I just want to mention, I'm excited to see you in person again soon, Bruce. We will be hosting the Summit on Responsible Investment in Kelowna on June 27th. Make sure you go to the CSE.com to get further details. If you're going to be in the area, make sure you register and come join us. We will also be recording all of the wonderful content that we'll be doing on stage that day. So make sure that you check us out at CSE TV after the fact, and you'll get to enjoy everything that we talk about that day and learn about responsible investment. Listen, Bruce, you have a wonderful weekend, and I look forward to seeing you next week.
Sounds good. Thank you.